Oh, they're traders. Okay, now it's time to really focus and concentrate on what you're doing here, right? There's there's a couple of key things coming out over the next 24 hours, and there's a bit of a process. Obviously, technically, you want to know, what's happening across the market, but let's just focus on where the action is going to be now. The RBNZ, for some reason, this is coming up as a second tier level event. It's high impacting. It's robust. Understand what the forecast is. 0.5% increase in interest rates, okay, 0.5%. It's going to come down to the statement. I'd say all the central banks will still be raising rates and issuing a little bit of caution, saying that depending on, whatever it's that they're going to focus on, it may be different in New Zealand, maybe housing as opposed to inflation and employment, but have a look what they are geared up towards. Now, if you're looking to trade this event, clearly you need to have Kiwi and the Kiwi crosses really squared away. If there's no good technical setups, generally it's going to take away the ease of getting into the market, right? That's one of the key things we're looking for. Now, the event itself could be a tradable opportunity if you had the technicals or without, but you need to know how the market's positioned, and I'll come into that in a second. So that's the first thing. There's some key numbers coming out of the UK. I think these will be pushed aside. Okay, it's not inflation or employment. They are good numbers. In normal market conditions, you'd be sort of actively running around with those, but it's not a massive event. The inflation rates out of Germany, right? The final numbers are coming in. They're usually right on target, but once again, inflation's a key number, so keep an eye on that. Then you come down to the inflation numbers out of the US, right? So that really the central bank is looking at the year-on-year number. Okay, the Fed, 8.8% is expected. Now, and one of the core things here, and just before I get into that, don't forget the Bank of Canada interest rate decision. This is going to be quite explosive. 0.75% factored in. What's the statement going to be? What's the comments, press conference? Once again, like the Kiwi and for the US, okay, you want to have the potential instruments that are going to be impacted technically squared away or know exactly what's going on. So there's two aspects to analyzing the market. And what you need to do is look at, as I was just saying there, say with the Kiwi, looking at, where's the overall direction? Is there a key entry level here or not? And doing the same for, say, sterling and dollar CAD. Now, obviously, you would go into, say, the CAD template and the Kiwi template, see if there's any potential crosses that could be a better opportunity than trading against the US dollar, for instance. Okay, so that's one of the key things. The other part of analyzing the market is understand how the market is set up. Okay, so what I'm talking about is there anything in the market that you can see that gives you confidence and understanding about what's happening? All right, so right at the moment, the North American equity is lower. We have a risk-off profile in play. Now, as we come out of that session, the US equity futures are just tweaking up. Like, they're hardly moved, but there's a little bit of movement. Now, the other part is anticipating what has already been factored into the market. Okay, so you can see at the moment, there's a good connection here between the equity markets and the currency markets. That should make you a little bit comfortable. Now, when you come back to the charts, right, you want to sort of see, and I think from memory, Lee was sort of talking about this. Monday, we saw the currency shoot to the downside and the dollar index or the dollar pairs move to the top side. It's almost like a preemptive move on what's the possibility of strong inflation numbers, right? There's a lot of energy in that. Now, what that does is it changes things for us a little bit, because that means a part of the big inflation number is factored in. And it actually sucks, because you don't want that factored in. You want to do the factoring in after the number comes out. The market often preempts the move. Okay. It's the whole, the saying was buy the rumor, sell the fact. In this case, it's sell the rumor, buy the fact. What that means is the market will anticipate strong numbers. And if I just move these charts out of touch, right? They are geared up towards a move so they've basically sold the rumor, which is strong inflation numbers. Okay. And then what happens when the release happens, right? It's like a factored in outcome on an interest rate announcement, right? You start to see the opposite happen after the event. So if it goes too far, even really strong inflation numbers may see the dollar fall a touch because it was already factored in on Monday coming into Tuesday. All right. So, and the other part of that equation is when you're looking at this, if it is factored in aggressively a day or so out, you often see a squeeze back, right? There's profit taking ahead of the release, right? So that's where it comes back. So I would actually anticipate coming into this, I thought this might actually come back to where the market really opened Monday, and we get a bounce on all these instruments leading into the number because the market's got ahead of itself, right? And that's where these earlier moves were. So the fact that we've seen a bit of a pullback already, okay, once again, builds it up again. If those US inflation numbers are 8.8, if anything, it revitalized the market for another swift move to the downside, okay? And that is a potential. Weaker numbers, we see these things come back very quickly. So it's one of the things you've got to anticipate and understand how the market behaves, right? Preemptive, sell the rumor, okay? And then when the numbers do come out strong, they actually square up and take profit and it comes back. The fact that we've seen a bit of this take profiting already tells me, okay, the factoring of strong numbers, it's probably only a quarter, half done now. So it actually makes it active again. Because if they hadn't have corrected, right, I would definitely be telling you, be very careful with strong US numbers here because they have been factored in already, right? So that's what I'm sort of trying to get across to you is understand not only how the market's positioned as far as, you know, the core structure, are the equities and the currencies all lined up? Are they moving together? What's happening on the bond markets? Okay, we've got a big in number here that's going to impact bonds, equities, currencies all at once. So you need to square this way. With the currencies, okay, we can see that this has been a little bit diffused with the recent pullbacks in some of these pairs. Now, it hasn't come back a long way, which still sets it up for the potential. And what the market's doing is it's covering its risk. The risk is a weaker number, right? Maybe tells us the inflation numbers in the US have topped out. I don't think that'll happen. Or we get stronger numbers and they kick in again, right? So when you come back and have a look at the positioning of the market, do the simple generic stuff, right? Are the equities, or in this case, it'll probably be the futures, are they really giving the currencies direction? Okay, that's what you have to sort of weigh up yourself and then come back and have a look, just have a look across what the bond market's doing. Okay, are they sort of, you know, the yields were, I think they were falling yesterday. It was a bit of weird activity on the bonds, and that can happen where, you know, they get out of whack with the equities. You know, we generally know what's happening with interest rates, with what's happening with the yields. So you just want to have a look, and don't forget, you're trying to isolate the best trading instruments. Okay. One other thing is, if you're looking at the currency relative strength, keep an eye on the dollar as a whole across all pairs. Now, I've got all the majors and the minors here with the dollar as the base currency, right? So if the dollar's performing the same against everything, at the moment, the dollar's going up against, that's the blue ones, against most things. So you're trying to isolate instruments where maybe it's not, work out why, maybe there's a trading opportunity, maybe there's not. So it's a good way to see if the dollar is uniformly, this would be a great basket for the dollar index. Unfortunately, they've got the majors, and, you know, we know Euro's 58% of that, but if you had all the majors and minors adding up to a different percentage of the overall dollar index, it would be a much better indication of what the dollar's doing, but it doesn't do that, obviously. But so you've got that, and then having a look here, to me, the purest move and the simplest will be inflation, anything on inflation numbers. Stronger numbers, right? These things get belted. Weaker numbers, it goes up, right? And you're not sort of really second guessing any activity on the currencies, because this is just one thing that happens, right? On the currencies, you've got to factor in a few different things. So just weigh that up. But unfortunately, with the equity markets, when you are looking at the equities, the currencies are giving us a few more entry levels. When you come back and you're looking at, I'm just getting those equity charts up. When you come back and have a look at the equities, you may not have as many entry levels. Actually, as I say that, we do have some here as well, which is actually looking pretty good. Right, where's my bloody thing here, right? So make sure you do your trend lines. This is a really great level, I've got to say. Even though it's short term, you only got 3 touches, it's the only one around. So traders will be watching that, because that's it, right? Top side, if we get weak US inflation numbers, equities are going to have a 5% up day, right? So gear yourself up for that. Try and weigh up and do a bit of a scenario analysis around, what if the equities do this? What if the equities do that, right? That's what the traders in the banks are doing all the time. They're sort of weighing up, what does a weak number do here? Okay, where's the greater risk? And then they sort of start to factor in potential plans. So if it does come out one way or the other, they know which plan to put into play instantly, right? It's a lot more aggressive, but you can cover some bases. If you find an instrument, just to finish up, whether it's an equity instrument, okay, US equity, or maybe even a Asian equity or a European one, then you could potentially trade those. Or, I tell you what, if you're trading cryptos, they'll be in play today as well, and all the currencies. So you're trying to look across the board and say, where's my best technical setup here? And what's the solution? What's the best technical setup for a strong US number? And what's the best technical setup for a weak US number? And you may find you may have a level here on the downside for an equity, and the best situation for a better US number may actually be a currency, right? So that's where you're going to become a dynamic financial market trader, when you can trade cross assets because you know the impact and you know where it's going to hit, right? The most important thing is too, setting up your trade plan, whatever you're looking for, have a look at the average daily range, right? You can actually get this on, let me just get this up. You can get this on your MT4, right? And I have this on our instruments here, and I was looking at this the other day, right? So just having a look here on some of the instruments, the average daily range up here, and have a look at the pip value. Now, there's a couple of things you can find here in MT4, and actually check this out. So you can go average daily range, right? How many daily ranges do you want to go back and check? You can go back and check the last 50 to get a better cross section of what's going on, or you can adjust it to a different time frame. And up here, okay, this information here, right? Pip value, spread, all these different components, basic info. You should have this in your MetaQuotes indicators, right? You can put that on every chart. So when you go to trade, you can see what the minimum trade size is and what the maximum is, and what the pip value is, and the general spread. It's a good indication of what's going on. And you can check out the average daily range. Make sure you're giving yourself an opportunity to get into the trade. The other thing is, right, when you are trading, say, equity indices, we're trading the event, like there's initial volatility, but it usually just goes one way or the other. So when you get in, you don't need to have a gazillion pip stop. You just need to cover the spread, say, for the first couple of minutes. Once the trade's on, it should move very aggressively one way or the other. So you're not placing pending orders in the market. Well, I guess you can, but that's where you're going to need a much bigger stop loss. If you're trading live, then work out, so the pip value, it's 0.1 of a dollar for one lot. So you'll be able to work out, so if I have a 150 point stop, you can be able to work out, okay, if I have 150 pips, that's 0.1 a lot per pip. So then you can start to work out, okay, if I want to risk $250 or $500 on the trade, you'll be able to work backwards using the pip value, what trade size you have, for that stop loss, then you're ready to trade. All right. So a bunch of different things there to consider. This is a really good event. It comes right into the sort of daily trade routine. These ones here. Now, a lot of instruments, don't forget, this is an excellent trade with a kicker, but you know what? A lot of the instruments, we don't have this one. All right. So that takes out one of the trades. So we've got a pretty good setup, right? We've got the kit, we've got 5 things lined up, right? So we've got the trends in play. We know we're a buyer or a seller. This is going to give us fresh momentum, and we've got the kicker, but you don't necessarily have the entry level. That changes things, right? So when you see that, you know there's a bit more risk involved, and that may adjust your trade size a little bit or the amount of risk you put on. I still think it's a good trading opportunity, but that's why I was trying to explain, you've got to factor in and try and analyze a little bit harder or closer what is actually, how is the market positioned, because that is a key part to working out, has it still got room to move if we get a strong US number or not, right? I think there is. We had a bit of diffusement leading into from Monday, the start of the week, where the market ran into this very aggressively. But we are now starting to see a little bit of a retracement. As I said, that sets us back up for, okay, gets my interest back in strong numbers again. Otherwise, really strong numbers, if this had already gone down here, you know what, I would have switched off and gone, you know what, I'm not trading strong numbers because this is factored in. So lots of things to think about, right? Anyway, work that out, see how it goes. And just remember, we're trying to build capital. You're not trying to make all your trades come home at once. There's a lot of risk around this, but if we get clean moves, as I said, we had clear, really good entry levels, well, you'd be charging in with your bells ringing, but some of these instruments we don't, some we do. So anyway, weigh it up, weigh up the risk, apply your capital, and let the trade go. And when it comes down time to the release, don't let the fear of failure and don't let your emotions kick in. Think about, this is a great opportunity. Okay, I've got to really assess this. If it fits in, nail it. If it doesn't, well, then stay out of it. Don't forget when it comes down to the main instruments you're looking at today, we've got plenty in play. We've got the Kiwi, we've got Euro data coming out. You've got UK data, you've got the US CPI, and then you've got the Bank of Canada there as well. So we've got a gazillion things coming out, and backed up with tomorrow, a major release out of Australia with the employment numbers. Whew, plenty to play for, guys. Plenty of action. You don't need to get them all. If you can get one of these events, and you know what, it may actually be something outside of the US CPI numbers. Sometimes when there's a massive release, usually it's the non-farm payrolls, it can be a secondary release, which actually gives you all the cash. So don't just charge into the big event. Make sure you have a look across the board, see what fits in with your time frame. If you're on the East Coast of America, right? Well, the UK data isn't going to work. It's like you're in the middle of the night. So let that go. Focus on what you can get to without stressing your lifestyle out. And that's half the goal there as well. All right, guys, hopefully that's helpful. Good luck, and we'll see you later on.